Hello class, I hope that you're having a great day and I hope that you're being good for the substitute. Today we're going to take some Cornell notes over the stock market. If you would please fill out the top part of your Cornell notes as well as pay attention to the essential question and the objective to figure out what it is that we're learning about. You can pause this video at any time if I go too fast because since this is our first time with this, I'm not really sure how quickly I can talk and what you guys can keep up with. All right, here we go. So our first terms on here are the differences between a bull market and a bear market. And I'm sure that you've heard of those before, but we need to make sure that we understand the difference between the two. So a bull market is where the economy is doing well. I think of this as the fact that the bull's horns go up, the market is going up. Typically, this could last anywhere from 29 months is the average, but it just kind of depends on how the economy is doing. We also need to add in on here that the stock market is doing well during this time. The other type of market is obviously going to be the opposite, and that is the bear market, where the economy is not doing well. And it also means that the stock market is down. This would be similar to what happened a couple of years ago as we went through the recession. Okay, currently we are in a bull market, and so that is great for everyone that has anything invested in the stock market. All right, so we're going to start here at the beginning. A stock is simply a unit of ownership in a company. So if you have a share of stock in whatever company it is, you are an itty-bitty, teeny-weeny part owner of that company. I'm sure that several of you have stocks or your families do, and I am interested to hear about those when I come back. Some of you might end up investing in the stock market. You guys know it's a little bit risky and I worry about everything, but some of you will definitely have some stocks as an investment. And again, it's just a unit of ownership. So if you have one stock, you're an itty-bitty part owner. So you can help make decisions for that company. You can go to meetings for that company. You are a part of that company. When you ever look on, if you watch like MSNBC or anything like that, and you see all those little symbols or acronyms running along the bottom of the screen, that's going to be your ticker symbol. Sorry about that. And that is simply how you know the stock from each other when you're just watching TV. So it's a short abbreviation for the company. That is used for trading on the stock market. It used to be that the ticker symbol told you what stock market the stock was traded on. For instance, with the New York Stock Exchange, they were always between 1 and 3 letters. For instance, Ford is only the letter F, whereas Google is G-O-O-G, and it's traded on the NASDAQ because the NASDAQ market you can have 4 letters. They don't really hold true to that anymore, but that's really where it started from. I'm going to go through and bold my answers to make sure that you guys are getting these okay. Oh no. There we go. All right. So we're going to talk about a couple of things that kids kind of get confused. These are the differences between the stock market indexes as well as the stock exchanges. Okay, so the exchanges are where the stocks are actually sold. The indexes are used to figure out how well a stock is doing. Let's type that on there real quick. Used to figure out how well a stock or a stock market is doing. So if you ever watch the news at night, which you should, you could, there's always a little part of the news where it tells you the Dow Jones was up or down or whatever, and it gives you a bunch of points. That's exactly what we're talking about. That is the index. It tells you how well the stock market is doing, okay? Now the Dow Jones average does exactly that. It averages, oops, let's turn on the bold. It averages the top 30 blue chip stocks, which you'll learn about more later on, but those are the very popular stocks, the stocks that do well. And that is what it does. So it's going to take those top 30 stocks, it's going to average those prices together, and it's going to give you an index value. Okay, so it's going to just take those top 30, and that's how they're going to average how well the market is doing. Okay, so only 30 stocks. Well, the Standard & Poor's, which is sometimes referred to as the S&P, the S&P 500 does the exact same thing, except it averages 500 stocks instead of 30. Okay, top 500 stocks, and this one is more accurate because it averages more stocks. All right, I'm going to pause this just a second so you guys make sure that you're all caught up. All right, let's keep going. Now we're going to talk about the stock exchanges, and let's write a little note up here at the top to remind ourselves that this is where stocks are actually bought and sold. Now, you and I can't just walk into these stock exchanges and buy stock. Can't be like, hey, yo, I want to buy some Ford stock or whatever. You have to work with a broker, which we're going to talk about later on these notes. But the two major stock exchanges are the New York Stock Exchange and the NASDAQ. Okay, now the NASDAQ is an abbreviation, but it's really long. You don't need to know what it stands for. But I do want you to know a little bit about the markets. There used to be an American stock exchange market as well, but it has merged with the New York Stock Exchange. All right, so the New York Stock Exchange began in 1817, so it has been around for quite a while. Again, it's very historic. All trades take place on the stock market floor. They don't do this quite as much because of everything that's done electronically, but in the past, if you ever watched any type of movie, or even if you turned on the TV to MSNBC, you could see all these crazy people down on the floor buying and selling, and they have these different colored jackets on, and those jackets will tell you what company that they're working for. Well, every time they're flying around doing all this stuff, that means that they're buying or selling. Well, now with the electronic age, that's really done through computers, but you can still see at the end of the day the kind of flurry that goes through, okay? I'm sure you guys have seen that in a movie or something like that. The New York Stock Exchange is the largest and most prestigious stock exchange. So if you are a business and you can say, my stock is traded on, oh, I really misspelled that one, prestigious. And I still can't spell it. There we go. And you can tell people, yes, my business is traded on the New York Stock Exchange. That's going to be influential to them. That's important, okay? Through this stock market, stocks are typically, the stocks that are typically sold are mainly blue chip stocks. That means they're the companies that have been around for a while, and they typically make a pretty good profit. Again, later on in the block, you guys will learn a little bit more about the different types of stocks. Then there is the NASDAQ market. This is like the new market. It began in 1971, and it differs from the New York Stock Exchange because stocks are sold over the counter. Just like if you go through Walmart and you buy Tylenol, that's an over-the-counter medicine, okay? But they're just sold over the counter through a sophisticated telecommunications network. So what I'm trying to say is they're sold electronically, okay? It doesn't have all those people down on the floor buying and selling and yelling and doing all that. It's sold electronically, okay? The NASDAQ typically sells growth, or, I really can't spell, growth or technology stocks. So it's going to sell more of the stocks that the New York Stock Exchange will say, no, that's too risky. I'm not doing that. Okay. So if you have any stocks that are like Google or Microsoft or any of those that are a little bit more risky when they first came out, Facebook, Twitter, all that kind of good stuff, those would be sold over the NASDAQ market. So those are going to be the two that we're going to focus on. I know a question that I always get is, how do you make money off of the stock market? Because kids hear this stock market and they're like, ooh, that sounds cool. I want to do that. Well, it's super, 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 super risky. It's a great way to make a lot of money, but it's a great way to also lose a lot of money. So how do you make money off of having a stock? Okay, the first way that you can do this is that you can simply buy low, sell high. That simply means you're going to sell it for more than you bought it for. So if it costs you $25 when you bought it, you're going to sell it when it gets to $30. Okay? That's going to be the first way that you can make money off of the stock market. The other way is that you can buy a stock that declares dividends. Okay? And that is just a small portion of the profits that the company has made, and they distribute those back to you. Okay. All right. And my other question to end this is, how do you buy a stock? I told you earlier that you and I cannot just walk into the New York Stock Exchange or to NASDAQ and purchase a stock. We have to work through a broker. And that is just a person who is licensed, so they've been to school, they know what they're doing to buy or sell stocks. Now, they can't tell you specifically what to buy and sell. Remember Martha Stewart and how she had to go to jail. But they can help you actually go through the process of buying or selling the stock. We also can work individually, and that would just be through a site like E-Trade, or I think there's one called Ameritrade. And that's where we ourselves would work through the website to buy a stock. Okay, so it's still not you and I going to the stock market, but it's a way for us to work in between. And of course, these sites have a fee, and you would also have to pay a fee to a broker. Okay. All right, so what I would like for you to do is come up with 3 or so questions over here at the side. Make sure they are about the notes, not about cars. And I also would like you to write me a summary and try to answer our essential question within that summary. All right, guys, I'll see you later. Have a great day.